In the past few weeks, I have shown you this chart. For the third time in a row, we have tested the 50 EMA. And based on past patterns, we should reach $160,000 in the next 4 to 5 months. Now, let's talk a bit about the current market situation, and I'll show you why we are not yet shifting into a bearish trend. Of course, we can see corrections, and a smaller interim correction is also necessary at some point. We have really risen very, very nicely, but the real question in the end is, what does the current situation look like? Will we set a new high, or will we see new lows? Based on that alone, it is extremely important that we break our all-time high. If that happens, then the altcoins will take off, but so will Bitcoin. But it's important that we manage to do that first. Here we can also see very clearly on the heat map that there is a lot of money sitting there, the higher it goes. That means, yes, grabbing the all-time high might still take a few days or weeks because we simply have a lot of liquidity here. But to the downside, we also have certain support zones because there is a lot of liquidity to be taken here as well. So in the end, the question is, which scenario is more likely? Because there's nothing else to it. In the end, it always comes down to probability here. And in my view, it is much more likely that we will set new highs here than that we will see new lows now. Just looking at where we currently stand, of course, it makes sense that we are more likely to rise than to fall. That doesn't mean we won't see any more corrections. We could very well drop back to $92,000 and then go up again. A correction is overdue anyway, but I'm looking at this more from a long-term perspective because you can see it perfectly on this chart. Here we have the MVRV score in blue and the Bitcoin price in white. We saw that when we surged so strongly back then with the ETFs, we were simply in an overheated zone on the MVR score. Accordingly, there were a lot of investors who were in profit. That's ultimately what this indicator shows us. But these investors sold off bit by bit. Then came the last upward trend triggered by Trump. You can already see that things were relatively balanced there because we also got a lot of new investors at that time. And now take a look at this. We are much higher, but the score is significantly lower. According to the indicator, this gives us further room to break out to the upside. We are still far from being in the overheated zone because it was actually very good that we flushed out these long-term holders here. And as a result, we've simply removed a lot of selling pressure from the market over the past few weeks. And we no longer see this selling pressure now because we've managed to get a lot of people out of the market. This is a very positive sign, and it simply indicates that we are still far from being in the overheated zone. And it always just takes these phases where we shoot straight up within just a few weeks, moving in a straight line. People set themselves new targets. People start talking about 50, 100 times returns and so on, and then they get hit hard. Then comes the sharp correction that lasts for months. Then people turn bearish, and bam, when sentiment is at its lowest, the market turns around again. That's exactly what we've seen, and I just proved it to you again with the indicator, that this is really how it works. But right now, this also shows us that we still have plenty of room to grow because a lot of people have already been, shaken out. And when it comes to social metrics, we're still nowhere near an overheated zone. And that's extremely important to understand. In this regard, I also like to look at a chart like this one. The stock to flow model is a very meaningful model for showing how and where we enter an overheated zone. And clearly you can see we're in a nice upward trend, but the overheated area is here in this green zone, and we're not there yet. What's even more important here, please take a look at this. Every time these lines start to spread apart again, that's exactly when we see the strong upward trend. And look at where we are right now. We're now slowly seeing exactly that scenario where the lines are moving further and further apart, and we're witnessing the latest upward trend here. But this also happens over the course of months. So you can see here as well, this takes months, even years. But so far, it has always been the case that when the lines started to diverge, they really did continue to do so. There has never been a situation where they moved apart a little, and then came back together again. That situation has never happened before. That means once this indicator kicks in, like it is right now, it also starts gradually. Of course, this is viewed over months and years, but even so, this is a very important thing that has just happened here. In this regard, you also have to take a look at this chart. This shows the Bitcoin price in relation to mining costs. Ultimately, the miners also reflect Bitcoin interest, or the OTC interest, or even the interest of us institutional investors. And here we can see very, very clearly that this interest between miners and the Bitcoin price level increases exponentially when we are in an overheated zone. Currently, that's not the case yet. That means the miners are still working diligently, and the miners roughly reflect the price of Bitcoin. In a fully developed bull run, we should definitely see a greater gap here, and then Bitcoin would be overheated. but that's not the case at the moment. So this definitely still gives us room to move upward. But what people need to understand now is, in recent months, it's really only been Bitcoin that has performed. With the altcoins, yeah, there really hasn't been much to gain. Even if I add the altcoins to the Bitcoin price here, we can see that the altcoins have also risen sharply, but when Bitcoin had this little mini correction, the altcoins were punished much more severely. And that's basically the reason why many people think, hey, this time everything is somehow different, or hey, maybe this time we won't see any altcoin. And that's a dangerous way of thinking, because this difference is actually connected to the real economy. Take a look at the same thing, because this chart ultimately reflects the risk appetite of investors. A high-yield credit spread means that investors are significantly more willing to take risks, because we only reach this when interest rates are lower, making it easier for companies to buy something here, and when government bond yields aren't that high. Only then do we break out down here, and that's when more and more capital will be left over for risk assets. At the moment, however, that's not the case, and accordingly, if any capital flows, it flows into Bitcoin. You simply have to understand here that Bitcoin is already risky, but precisely because of these circumstances, there is significantly less capital in the altcoins. If you're considering an overheated area, you could also take a very, very good look at this chart. I personally like to look at the realized Bitcoin price here, and we can see that the realized Bitcoin price is about $45,000, while we are currently at $103,000. That means it's already twice as high. If we look back at the past, what did it look like then? When Bitcoin was at just under $60,000, the realized price was $20,000. So not double, but triple. And that's important to understand, because it was the same during the 2017 bull run. Back then, we were at $20,000, and the realized Bitcoin price was around $5,000 or $6,000. Here, 213, the same. Take a look at it. We were at just under $1,000 here, and the realized Bitcoin price was $200. That means the gap between the actual Bitcoin price and the Bitcoin market price is still far too small for us to consider this an overheated area. There's still room to grow here. It's just important to understand. The longer this whole thing drags on, the higher the Bitcoin price will have to rise. Here we also have a P-cycle top indicator with a projection, and we can see that if everything continues like this, we would currently have to break through $150,000, according to the P-cycle top indicator. But if, as I anticipate, we see our Bitcoin top around October or November, then according to the P-cycle top indicator, we would have to reach at least $185,000. That means the longer this cycle ultimately lasts, the higher the price targets will be at the end of the day, and the more money can eventually be shifted into altcoins later on. You should be aware that what has happened in the last few weeks, Anitya, has simply been a market correction. In the end, nothing more has really happened, but accordingly, I also tend to believe that we will definitely climb even higher. And ultimately, what we've seen with Bitcoin over the past few months is a correction of nearly 30%, just like in every cycle. We encountered strong support here, which was extremely important. And in the end, we didn't break through anything nasty. We're still in an uptrend, and the uptrend is simply continuing as it should. But what's important, as I said, is that we break our all-time high here. And after that, things will get very interesting. I've already mentioned to you in the videos over the past few days why we don't have to expect a summer slump. Yeah, definitely check that out, because I showed you there that the way things are currently going in this market, we definitely don't have to expect a summer slump. We might see a small interim correction, sure, but we really don't have to expect a real summer slump because of the data we have and based on past trends. And at this point, I want to thank you all very much for watching. Check out the trading group, all the info is in the description. And see you next time, friends. Ciao.